You're watching Silver News Daily. Subscribe for more.
Silver at $500 sounds impossible, right? But what if I told you that analysts are predicting a 25-fold surge, yes, 25 times its current value, within this very decade? This isn't just another wild claim. From industrial breakthroughs to a brewing supply crisis, there's mounting evidence that silver could be the ultimate investment opportunity of our time. Stay with me, because what we're about to uncover might completely change the way you see the silver market.
That one's much more volatile. And then post-bust, I think the precious metals are going to lead the pack. I mean, you will see, I think, gold get to 20,000. So if it gets back to, say, 2,100 and then rallies to 20,000, almost 10-fold move. And silver, I think, can get to 500. So, if it moves back to the low 20s and moves to 500, you're talking about, a 25-fold move. So there's, I think, a huge future ahead in the precious metals. They're, unlike the stock market, where I think the peak this next year, meaning that 7,500, if that's what it turns out to be on the S&P, the peak we see in this cycle is likely to stand for decades in terms of the indexes. There'll be opportunities within the indexes, lots of groups that will do well, commodity producers, et cetera. But the indexes, I think, because of much higher interest rates next cycle, you'll squeeze PE multiples, et cetera. So I don't think you'll revisit the highs of this next, probably see the highs in the first half of 2025, maybe even first quarter. Those highs probably won't be seen again this decade and maybe not next decade. Whereas with gold and silver, obviously, I'm talking about, 20 plus fold increases in the metals. And obviously the miners will benefit.
Now, let's talk about why silver, despite its solid performance last year, still feels like the underdog compared to gold. In 2024, gold made headlines with record highs, climbing over $2,800 per ounce, while silver, though it saw a respectable 20.5% increase, capped at around $35 per ounce. This disparity created the illusion that silver was lagging. But here's the interesting part. This isn't unusual. Historically, silver tends to trail gold during the early stages of a bull run that then catches up in a spectacular fashion, often outpacing gold's gains by 2 to 1 or more. Let's break that down. Analysts point to the gold-to-silver ratio as a key indicator here. For context, this ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Right now, it's sitting around 90 to 1, a level that screams undervaluation for silver. Why? Because historically, whenever the ratio crosses 80 to 1, silver tends to snap back aggressively, rallying far beyond gold. In past bull markets, we've seen this ratio drop to as low as 40 to 1, often resulting in silver doubling or even tripling in value in a short span of time. But what makes silver so volatile? Unlike gold, which is almost exclusively used as a monetary asset or a store of value, silver plays a dual role. It's both a precious metal and a critical industrial component. This dual nature amplifies its swings. When industrial demand spikes or monetary pressures increase, silver tends to respond with wild price movements. So while silver's performance might feel underwhelming compared to gold right now, history suggests it's the calm before the storm. So what do you think? Could this dynamic set silver up for one of its most explosive rallies yet? Drop your thoughts in the comments below. And don't forget to hit subscribe for more updates like this. There's so much more to uncover about this incredible market.
I don't think so. I mean, anything is possible, I guess. But if you look, even in 2008-9, it came back quickly, faster than the markets, but it did get hit initially, and I think that's what you can expect here. As I've said it, gold won't fall anywhere near as much as the equity market, in my opinion. Silver could. Silver's got more volatility to it, but gold, you probably see it down less and recover much sooner because the response to the bust will be massive money as well as massive fiscal response, government response. But that massive money response means people will probably take that as a signal that we got to get into gold again. So I'm kind of using it. I still think there's a big run in gold and silver here in the next 6 months. But I'm saying gold can get to 3,400 here before the bust, pre-bust, and then could fall back anywhere from its breakout point at 2,100 to mid 2,500. So if you do a calculus on that, it's basically saying it can fall by somewhere probably between 25 and 30%, something like that, which would be half or less, half or a third of what the equity market does. Silver, I'm calling for it to run to 75 from here, so it's at 29. 29 to 75, and then at least back to here, and probably back.
To truly understand why silver is being positioned for such a dramatic surge, we need to look at the bigger picture, specifically the geopolitical and macroeconomic forces at play. First, let's address the elephant in the room. Donald Trump is back in office, and his proposed policies are shaking up global markets. Within his first few months, he's already made waves with tariff threats against China, Canada, and Mexico, as well as all 9 BRICS nations. These moves are reigniting fears of global trade wars and stoking economic uncertainty, a scenario where precious metals like silver historically thrive as safe haven assets. But it doesn't stop there. Trump's plans to increase tariffs and impose stricter immigration policies could potentially reignite inflation in the United States. Think about it. Tariffs drive up the cost of imported goods, which in turn puts upward pressure on prices across the board. If inflation rises, it benefits metals like silver, which are seen as traditional hedges against a devaluing dollar. And don't forget, the U.S. is already dealing with ballooning debt and rising interest payments. Some experts believe the government may have no choice but to inflate away this debt, creating yet another tailwind for silver. On a broader scale, geopolitical risks are simmering across the globe. The ongoing conflict in Ukraine, tensions in the Middle East, and economic uncertainties in regions like South Korea and Europe are all contributing to a climate of instability. Precious metals like silver and gold have always been safe haven assets during turbulent times, but silver's comparatively lower price point makes it more accessible to average investors, which could drive demand even higher. This geopolitical and macroeconomic backdrop is shaping up to be a perfect storm for silver. But here's a question. If inflation rises and geopolitical tensions continue to escalate, do you think silver's appeal as both a safe haven and an undervalued asset could make it the metal of choice for 2025? Let us know in the comments, and while you're at it, don't forget to subscribe. There's more to come as we dive deeper into this evolving story.
It does answer at least one concern out there, which is central bank control. It gets you outside of that. As I say right now, the reason I don't follow it more than anything is because it doesn't really have macro significance yet. If Trump embraces it and it becomes something else, if it grows and doesn't have one of those blow ups in the bust, it may become something that has macro significance. But right now, it's a great investment. People misunderstand me. I said I'm not staying away from it because I don't see it as an investment. I just don't. It doesn't fit what I do. I'm a macro strategist, and it's not a solution. At least at this point, it's not a solution for what I think is coming in the world. The melt up into a bust that takes it into deflation. The response to that bust being massive money around the world that blows the system up to a point where it makes our governments vulnerable, that sovereign debt is vulnerable, and you collapse in the 2030s. I just don't think Bitcoin has the kind of significance to answer that. Now, it may be an answer for a handful of people or a small percentage of people, but right now it is not a universally held security. It's not. It's not a system unto itself. So right now, it's just a good investment.
Let's dive into one of the most fascinating drivers behind silver's bullish potential: industrial demand. Unlike gold, which is primarily a monetary metal, silver plays a critical role in some of the most advanced and rapidly growing industries on the planet. And at the forefront of this demand, renewable energy, specifically the solar industry. Here's why this matters. Silver is a key component in photovoltaic (PV) cells, which are the backbone of solar panels. The International Energy Agency estimates that demand for solar power is set to grow at an annual rate of 16% through 2027. But here's the kicker. The latest generation of PV cells requires even more silver than before, bucking the trend of thrifting we've seen in other industries. In 2024 alone, the solar sector consumed over 6,000 tons of silver, a record-breaking figure, and this demand is only expected to rise. And it's not just solar. The tech revolution, including artificial intelligence and 5G, is creating an insatiable appetite for silver. This metal is used in everything from semiconductors to electric vehicles, making it indispensable in powering the digital age. Meanwhile, analysts at StoneX Financial predict that silver will benefit from the green energy and digital transitions even more than gold, thanks to its dual role as both a monetary and industrial metal. But here's where it gets even more interesting: supply. While demand for silver is skyrocketing, the supply side is struggling to keep up. Silver has been in a supply deficit for 3 consecutive years, with mine production and recycling failing to meet surging global needs. In 2025, this deficit is expected to widen further, creating a supply squeeze that could send prices soaring. So here's a question for you. As green energy and tech continue to drive unprecedented demand, can the silver market handle the pressure, or are we on the verge of a massive shortage? Share your thoughts below and make sure to subscribe for more updates. This is just the tip of the iceberg in understanding silver's explosive potential.
Take it with a grain of salt. But clearly this last move up where went through 100K was driven by the whole embracing of Bitcoin by the Trump administration. And it's a small market, relatively small market, with finite supply. And if it brings in more demand, as people say, oh, the Trump administration is going to go to Bitcoin and they're going to have bring it in as a reserve and etc. It just meant as that got more people interested in Bitcoin, it drove price up. I don't know. You could argue that was kind of a speculative, like you say, speculative fervor, speculative blow off. I'm not sure. You could argue that was kind of a artificially driven run there, or you could argue that it's just getting started and you got another one of those coming. Either way, I think in the bust is where I want to see what happens. One reason I don't follow it is I say it's never really gone through even a downturn. We haven't even had a recession since Bitcoin's been around. So let's see how it holds up in the bust, and then we can kind of see what kind of staying power it has. I am concerned about some of these people that are the lead spokesman for it. The kind of hype artists in a way, and it feels, on the one hand, it feels a little tulip bulb like.
Now, let's talk about one of the most revealing indicators in the silver market: the gold to silver ratio. For those unfamiliar, this ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has hovered around 6 to 1 during balanced market conditions. But right now, it's sitting at an eye-popping 90 to 1, a level that screams opportunity for silver investors. Here's why this matters. A high gold to silver ratio often signals that silver is significantly undervalued relative to gold, and history shows that whenever this ratio gets out of whack, silver tends to rebound hard, narrowing the gap with gold in spectacular fashion. For example, during previous bull runs, we've seen the ratio collapse to as low as 40 to 1. When that happens, silver prices don't just rise, they explode, often doubling or tripling in value in a matter of months. But what's driving this disparity right now? It comes down to perception. While gold is seen as the ultimate safe haven, silver's dual identity as both a precious and industrial metal can cause it to lag during uncertain times. However, this lagging is often a setup for a major comeback, as investors begin to recognize silver's undervaluation and pile in to capitalize on its upside potential. And there's another twist. Silver tends to be far more volatile than gold. This means that when gold prices move up, silver prices typically rise even faster, amplifying gains for those who time it right. In fact, some analysts argue that silver's volatility isn't a drawback, it's an advantage, offering outsized returns during bull markets. So here's a thought to ponder. With the gold to silver ratio at historic highs and the stage set for a potential correction, could this be the moment savvy investors have been waiting for? Let us know your take in the comments, and don't forget to subscribe, because the deeper we dive into this market, the clearer the opportunities become.
Be a lot of return. And then I think as we move towards the middle of the year, you're going to start realizing that, hey, yeah, this economy's losing a lot of steam. There's, Europe and Asia obviously are already in trouble, and Canada is struggling. Australia is going to join that. So I think what we're going to see as we move through the year is that we first go into recession, and then recession turns into this global bust, which is my definition of that is that it's something the speed of a recession, but far worse than our normal recessions. Kind of 2008-9 on steroids. As I say, the banking system in this country got some religion because of what happened in 2008. But banks around the world, Europe, Canada, Asia, are in far worse shape now. And I think that's where you're going to see the biggest banking problems. But then, because it's such a small world now, we're all intertwined. There's plenty of counterparty risk. It takes us down too. I don't know about bank failures, other than regional. The real estate issue is going to probably come to the surface. But in terms of the big banks, I don't know that they get as bad as last time, but they certainly are not going to be going. They won't go unscathed.
Now, let's address the elephant in the room: silver's supply deficit. While demand for silver continues to rise at a record pace, the supply side of the equation is struggling to keep up. In fact, silver has been in a supply deficit for 3 consecutive years, and 2025 is shaping up to deepen this trend even further. But how did we get here? First, let's look at mining. Unlike gold, which is often mined as a primary resource, a large portion of silver comes as a byproduct of mining other metals like copper, lead, and zinc. This means that when base metal mining slows down, as it has in recent years due to lower investments and environmental restrictions, silver supply takes a hit. Couple this with declining ore grades at many existing mines, and it's clear why silver production is struggling to meet rising demand. Recycling isn't bailing us out either. While some silver is recovered from electronics and industrial scrap, it's a fraction of what's needed to close the gap. And with industrial uses like solar panels and electric vehicles consuming more silver than ever before, the available inventory is dwindling fast. Here's another critical factor: investment demand. While industrial demand is eating into supply, investors are also scooping up silver as a hedge against economic uncertainty. Just last year, exchange-traded products, ETFs, and physical silver purchases surged, further straining the market. Analysts at StoneX even noted that silver inventory levels are being run down and we're now entering a period where the market could face serious shortages. And the consequences of this, a supply squeeze. When demand outstrips supply, prices don't just rise, they can skyrocket, particularly when investors and industries compete for the same limited resources. It's the perfect storm brewing in the silver market. So here's the big question. With supply dwindling and demand showing no signs of slowing, could we see a point where silver becomes almost impossible to source without massive price increases? Share your thoughts below, and don't forget to hit that subscribe button. We're just scratching the surface of what's happening in this market.
So my call has been for several years, we'll get this melt up and then the bust and bear. So bust refers to the economy, the financial system, and bear market accompanies that to the tune of maybe 70 or 80% downside. But we aren't done with the melt up yet. So my view, in spite of so much bearishness coming in here, very very near term, you have people calling for a top here, saying there's a lot of dangerous signs here, saying that the market is we're seeing little breath. This correction of the last month has taken breath down. So there's a lot of people thinking we've seen the top. I don't believe that at all. I think everything I look at in my work says there's one last parabolic melt up into a top. So I think could be a first quarter thing, could stretch into the second quarter, but I think the next 3 or 4 months is going to be probably the steepest, biggest rally we've seen to date. So that gets you to, my target is 7,500 on the S&P, 25,000 on the NASDAQ, 55,000 on the Dow, and 3,300 on the Russell. So the Russell from here is basically 50% upside. Dow, the Dow, the S&P, the NASDAQ, it's 25 to 35%, but that's a lot of upside still.
Now, let's address the elephant in the room: silver's supply deficit. While demand for silver continues to rise at a record pace, the supply side of the equation is struggling to keep up. In fact, silver has been in a supply deficit for 3 consecutive years, and 2025 is shaping up to deepen this trend even further. But how did we get here? First, let's look at mining. Unlike gold, which is often mined as a primary resource, a large portion of silver comes as a byproduct of mining other metals like copper, lead, and zinc. This means that when base metal mining slows down, as it has in recent years due to lower investments and environmental restrictions, silver supply takes a hit. Couple this with declining ore grades at many existing mines, and it's clear why silver production is struggling to meet rising demand. Recycling isn't bailing us out either. While some silver is recovered from electronics and industrial scrap, it's a fraction of what's needed to close the gap. And with industrial uses like solar panels and electric vehicles consuming more silver than ever before, the available inventory is dwindling fast. Here's another critical factor: investment demand. While industrial demand is eating into supply, investors are also scooping up silver as a hedge against economic uncertainty. Just last year, exchange-traded products, EPS, and physical silver purchases surged, further straining the market. Analysts at StoneX even noted that silver inventory levels are being run down, and we're now entering a period where the market could face serious shortages. And the consequences of this, a supply squeeze. When demand outstrips supply, prices don't just rise, they can skyrocket, particularly when investors and industries compete for the same limited resources. It's the perfect storm brewing in the silver market. So here's the big question. With supply dwindling and demand showing no signs of slowing, could we see a point where silver becomes almost impossible to source without massive price increases? Share your thoughts below. And don't forget to hit that subscribe button. We're just scratching the surface of what's happening in this market.
As long as we have a printing press, we're not defaulting on the debt. The problem with the issue with default, I think, is a 2030s problem, because by then I think we lose our printing press simply because inflation is way too high, and you can't print when printing just leads to even higher inflation and a bigger problem. So, but we're heading towards deflation, in my opinion. Certainly have low inflation right now. So default is not an issue, in my opinion. Now there may be a lot of rhetoric around it. There may be a lot of hand wringing in the next year over that. But ultimately, as you know, I'm predicting 20 trillion in new money coming out of the Fed in response to a global bust. So, some of that will get moved up if we start running into, default risk. But I suspect the Biden administration is, and Yellen being part of that, and certainly a loyal part of that, they're just trying to make it difficult for Trump coming in.
Now, let's address the skeptics. $500 silver price sounds outrageous, right? Even seasoned investors might be rolling their eyes at the idea of such a dramatic surge. But history has shown us that markets often exceed even the most bullish predictions during periods of extreme change. Could this be another one of those moments? Let's start with the biggest argument skeptics make. Silver has never reached anywhere near $500, so why would it now? While it's true that silver's all-time high is around $50, that was during the 1980 commodity boom, a time when inflation and geopolitical uncertainty fueled massive gains in precious metals. Sound familiar? We're seeing similar conditions today, but on an even larger scale, persistent inflationary pressures, mounting geopolitical risks, and a shift toward green technologies that heavily depend on silver. Another argument skeptics bring up is volatility. Silver is known for its wild price swings, and critics claim this makes it too risky for such a long-term price prediction. But here's the flip side. That very volatility is why silver often delivers explosive gains during bull runs. When silver moves, it moves big, and for investors who time it right, the rewards can be staggering. Skeptics also often overlook the impact of supply deficits. As we've discussed, silver has been in a multi-year shortage, with industrial demand vastly outpacing production. Analysts are warning that this dynamic could lead to a scenario where silver prices experience what some call a super spike, where scarcity drives a rapid and dramatic price increase. Finally, let's talk about contra-Rhine investing. Markets thrive on skepticism. When the majority doubts an asset's potential, it's often the perfect time to invest. As Jesse Colombo noted, the bearish sentiment on silver is itself a bullish indicator. It means most of the market is still sitting on the sidelines, which leaves plenty of room for new investors to drive prices higher once the narrative shifts. So here's the question. Are the skeptics right? Or is their doubt exactly what makes silver such a compelling opportunity right now? Let us know your take in the comments, and don't forget to hit subscribe, because the final piece of the silver puzzle is coming up next. And trust me, you don't want to miss it.
He's hitting the ground running, assuming most or all of his nominees get confirmed, and I think his cabinet posts get the people he wants. I am optimistic that Doge will make some significant cuts in government, and that we'll see a much more efficient government, 2 and 3 years from now. The problem is the macro trumps that. I mean, I'm talking about something we haven't seen in 90 years. You can call the Great Depression part of it was a bust. We did see massive bank failures around the world. And we did see, an economy that was far below any recessionary norm. So you could call that what I'm calling here. This one isn't going to be a Great Depression. It's not stretched out over a decade, because they will print that money pretty quickly. But the damage that's done in that 12 to 18 month time horizon that we're in a bust is massive. And it not only is bigger than anything Trump can offset with, it also really short circuits some of what he, if he were coming in a normal time, if this were even 4 years ago or 8 years ago, and he were doing this, I'd be super optimistic, because it's a very pro-capitalist agenda with pretty big deregulation, necessary deregulation, drill baby drill. So taking advantage of the resources we have in this great land, and cutting government, trying to reduce government's influence on the economy, which is usually a drag. Doing all of that, I think, 8 years ago would have led to, basically what, people call the roaring 20s. I think you would have seen that. The problem is he's coming in at this time when we're approaching that bust. And, yeah, he doesn't want to just print money like crazy, but that's what's going to happen. It's not because of Trump. It's not because of Powell. Every central bank is going to have no choice if they want to save the system. You can sit back and say, well.
So, could silver really hit $500? After everything we've explored, the answer is that the possibility is far more plausible than it might seem at first glance. Let's break it all down. First, consider the supply-demand dynamics. Silver has been in a multi-year supply deficit, with industrial applications like solar panels, electric vehicles, and even AI technologies driving demand through the roof. At the same time, mine production is struggling to keep pace, and recycling efforts are nowhere near enough to fill the gap. A growing shortage of physical silver could be the single most explosive driver for a massive price rally. Next, look at the macroeconomic landscape. Inflationary pressures are persisting, and with Trump's return to office bringing renewed tariff threats and economic uncertainty, precious metals like silver are poised to thrive. Central banks are pivoting toward monetary easing after years of tightening, which historically boosts the appeal of safe haven assets. And when you factor in geopolitical tensions, from Ukraine to the Middle East, the conditions for a silver surge are undeniable. Then there's silver's relationship with gold. The gold-to-silver ratio, currently at 90:1, signals that silver is drastically undervalued. Historically, when this ratio narrows, silver tends to rally with extraordinary force, often outpacing gold's gains by 2 or 3 times. If gold continues its upward trend, as many analysts predict, silver could easily follow, and then surpass expectations. But here's the wild card: psychology, the contrarian factor. As skepticism towards silver remains high, many investors are ignoring the metals' potential. However, markets often reward those who act before the crowd. Once the mainstream catches on, the flood of investment could create a feedback loop, driving prices higher and faster than anyone anticipated. So, is $500 silver realistic? It might not happen overnight, but with the perfect storm of industrial demand, monetary policy, and market psychology, it's no longer an outlandish idea. It's a possibility. For those paying attention, this could be the investment opportunity of a lifetime. If you found this deep dive valuable, hit that subscribe button for more insights, and don't forget to leave your thoughts in the comments. Remember, this isn't financial advice, just a detailed look at the fascinating dynamics shaping silver's future. Thanks for watching, and we'll see you in the next video.